Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, April 5th, 2010. Well, folks, the market's again grinding higher today. Not a huge up day, again, kind of on par with what we've seen of late, which is these grinding higher up days where the markets initially get upsurge and then go sideways most of the rest of the day, maybe a late day bounce as well after a little bit of selling. And that's exactly what you can see today. Again, the market's gapping slightly higher here, right up here, giving a nice little bounce. We gapped up right into the Thursday high. Remember, Friday was closed for Good Friday. So today we gap up right here, sell a little bit, and then you have that initial buy program coming in. Now, whether or not that buy program is plunge protection related, you just don't know at this point. The volume is extremely light today, folks. We're on par for the lightest day in 2010 and possibly 2009, which is really astounding if you think about it. Going back a year and a half, lightest volume in that time frame could be today. We've done 70 million on the SPY in trading volume. That projects out to about 100 million or maybe even less, depending on whether or not we see any volume. But look at the bottom of my chart here. Volume extremely light. Really, ever since the opening couple candles, you had a little bit of extra volume. Then it just trailed off into nothingness. So again, right now we got that gapped up into yesterday's, or I should say Thursday's high. We had a little bit of initial selling on profit taking on the gap up, and then the buyers came in and lifted this market up on light volume, surged it higher for 1, 2, 3, 4, 5, 6, 7 straight green candles. Then you have a nice little pause, uptick, pause, pullback, and then sideways to lower trading. So again, you can see that sideways to lower trading going on. The volume literally non-existent today, folks. As far as I'm considered, or I consider this, you should have closed the market today as well, because it's just not even worth it being involved when the market is this light in volume, at least for the day trader. The day trader, again, if you look at this, there's really nothing to do here. You're just chopping sideways and floating, maybe sideways to lower at this point. Now, be interesting to watch in the afternoon. Do we sell off a little bit, or do we rally? Now, a couple things to look at. Number one, you have a minor in spirit of bear flag right here. A little downward move, 2 straight candles, then 1, 2, 3 inside bars underneath the 20 moving average. That's very minor in spirit of bear flag. Now, what would be the reason for this not playing out? Well, simply put, the volume is way too light at this point, folks. Again, any pattern in this market that's bearish, I would not think that it would play out until it proves that it can. Make it prove it to yourself, then start to look for it. That's the way I would think about doing it right now, folks, because again, the volume generally favors the upside when it's this light. I would say about 90% of the time, this light volume will favor the upside, and even in a bear flag pattern like you have here, I would not anticipate it to play out to the downside. All right, now if we move back up, you're going to look for resistance right up in this range, right at the highs of the day, 118.85. If you continue through that level, you're going to look for 119.10 on the SPY as your next resistance point. If you fall back down, you'll look for this little pivot low as minor support, and then this trend line right here, the yellow trend line sloping up right below that. If you get through that, then you can look at the 50 moving average and the opening range of the day where we could come back into. That's right around the 118.25 level on the charts, 118.30 level on the charts. And again, that's the high going back to last Thursday when this market traded. Now, a couple stocks in motion today of interest. Apple is trading slightly higher after they sold quite a few of those iPads, 300,000 on the opening day. Interesting to note that Apple did not get above Thursday's high. And again, it's interesting to see if this high now becomes a major level, because this was previous to the release. Now it's been released and it's having a hard time getting back to those levels. That tells me that could be a significant resistance area on Apple and should be watched as a possibility for a pullback off of this current level, right around 238.50, 239 level on the charts, all right? And again, notice Apple very whippy early in the day. Gap down, rallied higher sharply, came back in and went negative, went positive again, chopped around, and has kind of evened itself out here. These are your resistance levels on the upside of Apple for the obvious reasons, all right? You can see right here, these are your main ones anyways. This level of around 238 to 238.25, and then really 238.75 to 239 on the upside. All right, other stocks in motion today, guys. Research in motion, Amazon and JP Morgan all negative. Research in motion coming off earnings late last week. That's continuing to sell down another $1. Amazon on the back of their Kindle. Again, iPad now rivaling Kindle. That is under pressure again today, down about 38 cents on Amazon. And JP Morgan is just down 3 cents, 4 cents on the day here. Very minor here. You can see there's a little bit of a necktie of resistance at 45.10 right here. And again, it's starting to inch up a little bit off of that. But if that could fall back through here and go down in this range, you could see it move down as well. But JP Morgan a little bit on the weaker side. Interesting thing with JP Morgan today, folks, is that you can see that your level right here continues to hold up beautifully, which is your 45.20 level. Now, you've pierced it multiple times and gotten up here, but this double top from January is still holding up, at least at this point of the week or month at this session, from last January's high. And you can see, just draw that line straight across. Pierced it once, twice, right here 3 times, 4 times on Thursday, today 5 times, and we're still below 45.20, which seems to be that resistance point on the charts. A couple other charts to go over here as we want to just focus. What's leading this market today? Why is the market getting a bid? Simply put, it is the oil stocks and oil, guys. UUP is positive on the day. That's the dollar. So the dollar, even with the dollar higher, oil is still getting a bid. You might say, well, why? Well, the jobs number reported on Friday morning, global optimism, those are all driving the idea that demand should be increasing for oil. The USO here, guys, ran up into a key level that I talked to my premium subscribers about. They know what that one is, and again, they can take action according to what I stated last week was a possibility of action should they choose to. If they did that, they should be in the money pretty nicely at this point. All right, so keep an eye on that as well. On the USO's strength today, what other stocks are taking off? That's correct. ExxonMobil today, very, very strong. Look at this Exxon chart, guys. Really surged up, was really the leader of this market along with Chevron. CVX is Chevron's symbol, CVX right here. As you can see, good solid move up, about $1 higher on Chevron. So Chevron and Exxon are really leading the pack here in the markets. That's really keeping the overall markets as strong as they are and not allowing them to significantly pull back at this point in time. All right, just a couple other things, folks. What you want to watch today and this week, keep an eye on the dollar, keep an eye on volume. Volume is exceptionally light. That is helping the case for continued upside. As long as we can see this type of volume, and let me go back to the SPY. I mean, look at the bottom of the chart. You can barely see the candles. They're so small today. And as long as that's the case, you just continue to have that neutral to slight positive bias on the markets. They can continue to keep this market floating as long as the volume stays that light. All right, now join the Research Center. What I mentioned to everyone last week was we're doing live broadcasts now in the Research Center. We debuted the first one as a test case on Friday for the jobs number, had a live broadcast with charts for everyone in the Research Center on Friday morning for that jobs number as it came out. It was a fantastic success. We will be adding that into the Research Center over the next few weeks to a month period. And again, it's another great addition included in the Research Center. So we encourage you to come join, get live broadcasts now, and text message alerts when we're going to be doing live broadcasts, when there's an addition to the Research Center, a stock trade, a swing trade, you name it. When it's done, you'll get that alert, assuming you sign up for them. Enjoy. Have a wonderful week. Let's make some money this week, folks. Talk to you soon.